You're listening to The Voice of Russia. I'm Hywel Davies, and today's topic is tax avoidance. It was a compelling spectacle, though at times it felt almost cruel. Earlier this month, senior executives at Starbucks, Google and Amazon appeared before a House of Commons Select Committee. The MPs savaged the managers, accusing their companies of avoiding tax on a huge scale. Margaret Hodge, chair of the Public Accounts Committee, said she was outraged and called for a consumer boycott of the three companies. But is such outrage justified? None of the companies broke the law after all, and they have a legal responsibility to their shareholders to maximise value. Here to answer that question is Abhijit Pandya, a blogger for the Daily Mail, who's also the director of the Centre for Democratic Studies, a think tank. Miles Dean, founder of Milestone International Tax Consultants. John O'Connell of the campaigning group the TaxPayers Alliance. And down the line, we have Professor Philip Booth. He's from the Institute of Economic Affairs. If I might start with you, Miles, do you think that Margaret Hodge was right to call for a consumer boycott of these companies?
Absolutely not. I thought it was an interesting spectacle to see MPs on the PAC branding international businesses, tax dodgers, and using words such as immoral. And it only went to illustrate, in my view, the lack of knowledge, tax knowledge that MPs and other people supposedly running the UK have. What was particularly interesting was, I suppose, the surprise that the MPs showed at how international businesses are operating.
But isn't there a moral case to be made? As a PAYE employee, we have to pay 30% tax, so why should someone like Starbucks pay no tax for 15 years?
Well, I think the use of the word moral and morality, bringing that into taxation, is misguided. I think the whole debate started with questions as to whether these companies were paying their fair share of tax. Morality, I think, is completely different. I certainly don't believe that these large multinational companies are being immoral about the way in which they structure their business and tax presence in the UK.
Abhijit, we should divorce tax from morality?
I don't think we should do that, but I think that my morality would be quite a different morality to the one Margaret Hodge had. Starbucks is an extraordinary organisation and should be congratulated. It provides has 150,000 employees globally, and this is no mean achievement, particularly in a time of an economic recession. When we tax, we basically lose jobs, especially we're talking about corporate tax here. Corporate tax, in my view, is far too high. Economic liberty is fundamental for corporations because that's what gets the economy going. For politicians to react to this like socialist youth, at university is totally immature, and it's not looking at the greater need and the greater good that Starbucks does, for example, in the UK. Starbucks generated profits of 3.3 billion in the UK. That's important, and that's doesn't mean that's something that the government or the state has a right to grab.
That's a very good point, of course. But if you're Costa Coffee and you're paying your 30% tax, corporation tax, aren't you at an economic disadvantage?
Well, that's the whole point. It's a competitive market, and if you manage to afford and be technically more superior to your rivals in terms of the way you file your tax accounts, then that is an advantage that Starbucks should be able to take advantage of in the market. And I think it's fair play, and well done to those lawyers and accountants who are working for Starbucks.
Sorry, Miles,
I also think there's a fundamental difference between the two organisations, say Costa Coffee, Starbucks, and Cafe Nero. The fundamental difference is that Starbucks is a foreign-owned business headquartered outside the UK in the United States, whereas the other two are principally UK businesses. There's been no discussion as to how those two UK businesses structure their tax footprint outside the UK, or how the holding companies or associated businesses are structured outside the UK. Unfortunately, fortunately, we have a tax system and agreed tax principles that allow Starbucks, Google, and other multinational companies to structure their affairs like this, minimising their tax footprint in the UK.
Would the Taxpayers Alliance go along with this sort of line of argument?
Well, I find it interesting that MPs choose to moralise about, companies that aren't breaking the rules with their own expenses system. They always say, "Oh, we're playing within the rules." It doesn't seem to make sense that they're now choosing to moralise about companies that are playing very much within the rules. I think that if any consumer chooses not to buy at Starbucks because of their tax arrangements, that's down to them. But it's not up to MPs to start moralising about it when they have very questionable expenses system themselves, where they say they're playing within the rules.
But we do have here the example of one of the companies charged themselves a 6% licensing fee, which seems to be a figure that's plucked completely out of nowhere. Do you think that they're playing the system to some extent?
They're playing a system that the politicians put in place in the first place. So for politicians then to go and moralise about that, there's something wrong there. If we need to do anything, we need to radically reform the tax system to get rid of these loopholes and to make it clearer, more transparent. Politicians shouldn't start moralising about a system that they created themselves.
Professor Philip Booth, sorry, do you agree with this? Politicians are the ones who can change this system, and they haven't done so far?
Yes, and in fact, with regard to Starbucks is a relatively simple case. There already are rules in relation to transfer pricing, which is the mechanism by which it appears that Starbucks has ensured that it makes no profits in the UK and makes higher profits in lower tax jurisdictions. And if the HMRC disagrees with the way in which Starbucks has determined the prices at which it transfers goods and services between the different subsidiaries in different countries, it can take some action. And I think this whole thing, really, this whole approach by Margaret Hodge is pretty grubby for three reasons. The first is that corporations pay huge amounts of tax, a huge amount more in tax than they can possibly receive in terms of the services which are necessary to allow them to operate. If you just look at business rates, which is one tax that nobody very much talks about, business rates would finance the whole of the police force, the whole of the fire service, and more or less the whole of secondary education for the whole country. Never mind just those aspects of the services which businesses use. Then vehicle excise duty and other taxes that businesses pay to contribute to the cost of the roads, which is something that Margaret Hodge brought up as an issue. We pay in taxes about £30 billion more than the government spends on the roads. And the main problem here is that governments spend too much money and charge and have tax structures which involve very high rates of tax, and because rates of tax are so high...
Sorry, Professor, that's an ideological position, not one of right or wrong, is it here? You're saying that as a statement of fact. Well, that's a matter of opinion whether taxes are too high or too low, though, surely?
Well, there are certain consequences if taxes are high, and one of those consequences is that not only corporations but individuals will try to avoid paying taxes. Sometimes they'll do that through legal means, sometimes they'll do it through illegal means, but here we are talking about legal mechanisms for avoiding tax. So, if somebody is married, for example, to a spouse who gets paid relatively little and therefore doesn't pay any income tax, on the whole, that married couple will tend to put any assets that they hold, any interest income and so on they get from those assets in the name of the spouse with the lowest level of earnings. Everybody gets involved in this type of thing, but of course corporations are...
No, sorry. Financially sophisticated people might do this, but I'd say the vast majority of people don't do that, surely. What you're talking about here is a small financially sophisticated elite who might do this, no?
Not at all. I think huge numbers of people, including the self-employed and as I say, married couples who have different levels of earnings within the couple, take action in order to reduce their tax bill. But we should remember that Starbucks isn't an elite. It's an easy whipping boy because it's a corporation. But Starbucks is owned by anybody who has who saves through a pension fund, if that pension fund's invested in international equities and so on. The more we bash these companies, the more difficult it is actually for them to operate and make profits so that we all prosper.
Sorry, John O'Connell, you want to come in?
Yeah, just to say, ordinary people do engage in this kind of activity when they buy illicit cigarettes, illicit alcohol or illicit fuel. I mean, this isn't just restricted to the Starbucks and the Amazons of this world.
But the number of people who buy illicit fuel and cigarettes and alcohol is pretty small, I would have thought.
Well, no, the tax gap over the last 5 years has been up near £30 billion on those type of products. So we're talking about significant amounts of money here. So it's easy, like as Professor Booth said, it's easy to pick on Starbucks, etc., as whipping boys. But high taxes do cause people to avoid tax through other means than we've seen in the recent headlines.
You're listening to The Voice of Russia. I'm Hywel Davies, and today's topic is tax avoidance. And joining me in the studio today, we have Abhijit Pandya, a blogger for the Daily Mail, who's also director of the Centre for Democratic Studies, a think tank. Miles Dean, founder of the Milestone International Tax Consultants here in London. John O'Connell, who's research director at the TaxPayers Alliance. And down the line, we have Professor Philip Booth, who's from the Institute of Economic Affairs. Let's get to Abhijit trying to get in here.
Yes, I'll come in on that. I think the problem is when you say people aren't paying their fair chunk and somebody else has got to pay, you've got to understand the other side of the equation, which is where is this money being spent? And are we generally taxing too high? Whether it's employees through PAYE or whether it's Starbucks or corporations, I think we've got to a point now where we have to ask, looking at the government accounts, whether the state is simply too large and whether all areas of taxation are too high in the UK, and whether that's going to affect... I mean, the whole point of this Starbucks case is illustrating is that companies are going out of their way to do this because corporation tax is too high. And that is not good for the British economy.
But if not enough corporations are paying this tax, then it's going to be higher for the ones that do. The idea that tax is too high is, once again, as I put it, is an ideological position which is not necessarily backed by people.
No, it's not. It's a matter of fact, because you tax according to your expenditure as a state or a government. And therefore, your taxation is how you wish the state to spend its money or actually not spend its money and make sure that money is back in the pockets of its citizens, whether they be shareholders in corporations or a person who has no interest in this sort of thing but simply earns a basic salary. And I think that this is all about the relationship of the state and the individual and how big a state, which is in modern times, our state has grown beyond all proportion, particularly under 13 years of New Labour. I think what we have to realise is we need to start slashing the state, and therefore corporations and headlines, the corporations that do this and headlines like this stop reappearing. I don't think that when Margaret Hodge looks at this, she's looking at it from a very, very tiny perspective, which is, here's a clever bit of accounting and trying to sort of, make sort of media points out of it for the left. But I think the more critical issue here is how big has the state got that corporations are doing this and corporation tax is so high, and why should employees even under PAYE pay so much tax? Should that not be reduced? I'll give you a simple example.
No. Let me stop you here. This is clearly an ideological position in that we have had, this is historically the moment, we actually have quite low tax rates. 20 years ago, they were much higher, yes? The high rate of post-war, the high rate of tax, much higher.
You can't say it's ideological.
Sorry, can I let Miles come in?
Well, I think when I was a young kid, when we had tax rates of 98% on unearned income, I think that's probably led to a whole load of other issues, such as the transferring of money and wealth to places like Liechtenstein and Switzerland 30, 40, 50 years ago. But now I think that the tax system in the UK, from a personal perspective, or personal tax, with rates...
Sorry, can I come back to this? Yeah. The rate is historically quite low at the moment, no?
No, I think it's historically quite... Well, at 50% when...
It's 45 now, but yeah.
But the state is spending 50% of national income. That's historically very high indeed. It only once reached those levels in the past in peacetime. And of course the state isn't raising that much in taxes. That's why we're borrowing so much. And indeed the state has never really on a consistent basis been able to tax its population more than, in the UK certainly, more than 40% of national income. And the reason why is because you get this type of avoidance behaviour and of course evasion as well. People work in the black economy to a greater extent when tax rates get higher. It's true that marginal tax rates paid by a lot of individuals in some situations are low now, but rates of national insurance are much higher now than they were 30 years ago. There are far fewer exemptions. You used to get exemptions for mortgage interest and an awful lot of other exemptions. You used to get exemptions for the parental contributions that were made to children in higher education and so on. Now children in higher education pay their full fees. You used to get a lot more exemptions from the payment of tax than you used to. And overall, the tax burden is now back up roughly to where we were in the mid-1970s.
Sorry, just go
on. And what we're looking at now is an extra 1.5 million people being dragged into the 40% rate because it's not keeping up with earnings. So to say rates are low at the bottom end with the basic rate is 20%. Once you start earning what we'd call a decent amount of money, you're straight away dragged up into the 40%.
Sorry, what is a decent amount of money?
Well, precisely. But the cost of
but the average wage is what in these countries about 25,000.
Yeah, roughly.
Which is nowhere near the top of the higher rate of tax.
No. But if you have that in place where you're dragged into a 40% tax bracket, that places a disincentive to work harder and earn more money. Surely. And what your earlier point about people paying more PAYE because of corporation tax gaps, the answer isn't for politicians to spend loads more taxpayers' money aggressively trying to close down these loopholes. loopholes because they'll open them up elsewhere. They need to reform the system.
Miles, is the problem is that we just have too complicated a tax system?
Well, I think that's certainly the case from a domestic point of view, that the UK tax system and the legislation runs to many thousands of pages. I think just coming back to your question or your comment about the historic rates of tax in the UK, from a corporate perspective, of course, the rates are relatively low in the UK now. So the way in which a multinational structures its footprint in the UK is very similar to the way it would structure its affairs or its footprint in Germany or the United States. And our tax system and the transfer pricing methodologies and the OECD model conventions and all those, the way in which international tax systems have developed and grown over the last 30, 40 years allow businesses like Starbucks, Amazon, Google to structure their affairs like this and pay tax on the profits that they generate in countries like the UK.
Professor Philip Booth, you've actually called for Britain to become almost a tax haven, and you've said that tax havens are a good thing for companies.
Well, I think tax havens are a good thing in general because they put, if you like, competitive pressure on on governments to keep government spending down and ensure that they run themselves in a lean and efficient way. It's extraordinarily difficult to hold governments to account. Margaret Hodge talks about holding Starbucks to account, but it's very difficult to hold governments to account. Every 4 years we have an election which is fought over a whole range of issues, and we elect a group of people to Parliament who can then more or less take any decisions that they wish. And of course, governments...
Yes, but at least we do have every 4 years. Sorry, Professor, at least we do have some influence on them every 4 years. I mean, if I want to influence the head of Deutsche Bank or the Barclays here, I have no influence at all.
Well, you can decide whether or not to buy or sell their shares. But the point is that you can we elect a government only every 4 years. Meanwhile, there are very few pressures on government to keep themselves efficient and keep taxes down. And one of the pressures that we have had increasingly, thank goodness, as governments have got larger and larger in the West, is competitive pressure from businesses who are able to locate themselves in different tax jurisdictions. Goodness knows what rates of tax we would be paying if we didn't have that competitive pressure.
Sorry, Andrew.
Yeah, I think there's two important things here to just go back on. First one is, does Margaret Hodge know that if we were to tax Starbucks profits at 20%, let's say 3.3 billion at 20%, how many jobs would that have cost in the UK? That would have cost quite a lot of jobs.
But that would surely mean that the competitors like Costa could go in and they do pay their taxes, so they could take over the ones that were closed down.
Well, no, that's not necessarily the case at all.
Well, neither is it necessarily the case that they'd lose jobs.
You know, I think that the fact is that would significantly be detrimental for Starbucks.
And good for Costa.
Well, perhaps in the UK, perhaps not in other places. Perhaps Starbucks would have lost jobs across the board.
You're not answering my question. You have UK companies that are paying these rates. Why should they suffer when places like Starbucks are getting away scot-free?
Ultimately,
they are paying taxes, just not in the
They're
UK.
not. They're paying us £8 billion in corporation tax in the last 14 years.
Not in the UK. Their operations are international.
I'm sorry, we live in the UK. This is the issue we have to care about. Sure.
But Starbucks is producing its products internationally and paying tax on its profits internationally. So you can't just compare the UK tax that Starbucks is paying with the UK tax that, say, Costa pays. It's paying tax on its profits worldwide, and that's at a far higher rate than zero. I did read somewhere, I'm not sure whether it's confirmed or not, that Starbucks has paid overall worldwide tax equal to about 36% of its profits.
That doesn't help the exchequer here.
No, it doesn't, other than the fact that, of course, Starbucks is an employer, it invests in the UK. But I'm not sure whether that's the point, whether it makes a difference to the exchequer. The point is that, again, if we go back to first principles, Starbucks is a fundamentally different business to Starbucks and Nero. And the branding of Starbucks as immoral is unusual. If you look at the competitor, Cafe Nero, for example, I think they had profits of 40 million or thereabouts last year. They didn't pay any tax in the UK because those profits were group relieved. So they offset losses as part of the group against the profits. Is Nero any more moral or immoral than Starbucks, simply because it's used an accounting technique to offset its profits against its losses.
But the wider picture is surely that there are coffee shops that don't use accounting techniques. There's the independent one down the road that does pay its corporation tax.
But that's competition.
And that's called tough. You know, that's the free market.
That's the way it works. It's the free market. If you have the clever accountants, you're the one who gets ahead.
Absolutely.
But isn't there an element of morality in this? Are we just divorcing this entirely from morality?
No, because it's nobody's business, barring legality. If this issue had been about legality, reality, which it isn't. It's nobody's business how Starbucks chooses to audit itself within the confines of the law and ensure its profits are maximised. That's the whole point of having a corporation. It has to ensure its profits are maximised to grow and expand. And I think that it's our misunderstanding of where the role of the state legitimately lies through taxation in these issues that has got us into a muddle and has got Margaret Hodge taking the position that she has done. My view is it's not the role of the state to actually be involved in these matters to anything like the extent it is. The reason the tax code is so significantly large is on part because we have got to a position where we are trying to basically bully our companies into cutting corn, in order to rein in taxes. But the question we have to ask ourselves is that do these kind of instances give us an illustration that perhaps the government is spending too much and taxing too much? Perhaps when government departments like the Department of Culture, Media and Sport, which have an annual budget of short of $2 billion, whether that's an indulgence and whether it might be better to lower corporate taxes and create more jobs than have those indulgences. And I think that's where the debate has to go. Whether we can afford complexity of tax laws and administration of them to this extent, and whether we need to start thinking about reining in, cutting down the state and letting corporations, which are private entities and need to be accountable in a different way to public entities like the government, and whether those entities should be given a free rein.
You're listening to The Voice of Russia. I'm Hywel Davies, and today's topic is tax avoidance. And joining me in the studio today, we have Abhijit Pandya, a blogger for the Daily Mail, who's also director of the Centre for Democratic Studies, a think tank. Miles Dean, founder of the Milestone International Tax Consultants here in London. John O'Connell, who's research director at the TaxPayers Alliance. And down the line, we have Professor Philip Booth, who's from the Institute of Economic Affairs. Sorry, Miles, you want to
and picking up on that point, maybe that's what Starbucks and multinational companies investing in the UK consider. But they think, well, if the government had a better track record of deploying and spending money, we'd feel happier giving a greater tax take. I'm sure that isn't the point, but that isn't a consideration they take into account. But maybe it is. Can I just come back to one thing? You mentioned the 6% royalty rate that Starbucks.
Now I think cut to 4.75.
4.75.
Yeah.
In the PAC, there was astonished looks that this would be part of Starbucks' overall tax strategy. What I find interesting is that it's inconceivable that HMRC have not pre-agreed that rate with Starbucks in the same way that they pre-agreed the transfer pricing policy of Amazon.
Because it did come out in the accounts committee that they clearly had that both Starbucks didn't know how they'd come up with this figure of 6 or now then cut down, and neither did the HMRC did realise what it was about. Really,
they would have done, because the reality is that these multinational businesses have departments, or they engage third-party advisors to do benchmarking studies to value and to price services and goods.
I'm quoting here the chap from Starbucks. He was asked about the royalty-reflected costs incurred by the business outside the UK. When challenged by the committee, he said there was no detailed analysis of the costs behind that 6% figure.
Well, there's a legal requirement under the UK tax code for large businesses to have a transfer pricing policy and a file or files documenting why and how they charge the prices that they do. Those files, the methodologies used, will be taken before HMRC and agreed under the advanced pricing agreement rules. So it's inconsistent.
So you're saying the chief financial officer of Starbucks was just incompetent in front of the committee?
I'm not saying he's incompetent, but I find it hard
he said there's no detailed analysis of why they came up with this figure.
There must be. I don't believe that. Okay, answering your question very straight, I don't believe that. There must be. If Starbucks hasn't got a transfer pricing file, then that's just inconceivable.
Just going back to the point of morality, I think we have to remember that companies like Starbucks or any other company are legal fictions. Companies do not pay taxes. People pay taxes. They either pay them or
corporation tax is paid by a company, isn't it?
Companies can't pay taxes any more than your TV pays the TV license. People pay for it. It comes through reduced profits for shareholders, higher prices for customers, things like that. And I think that we have to remember that when we're talking about these large corporations, because it's easy to paint them as this huge evil, sitting in a volcano somewhere looking to dodge tax and do this, that and the other. But at the end of the day, people pay taxes.
Professor Booth, I think you're trying to come in.
I mean, when it comes to the morality of these issues as well, I think we have to appreciate that these companies are using the tax system as it's intended to be used. Margaret Hodge might like the tax system to be different, but these are not particularly peculiar arrangements. It's not as if they've set up some strange trust in the Cayman Islands and tried to pay their employees through that trust as if somehow they're paying employees profits rather than wages in order to avoid national insurance or some business like that, where I think there are moral grey areas. The tax system is set up and designed to be used exactly in the way these companies have used it. And if the politicians wish to change that, I think there'll be damaging consequences if they did. But if the politicians wish to change it, they can do so. But one thing we also haven't covered is the way in which international corporations can often end up paying tax where it's not intended and paying tax twice, or their owners can end up paying tax twice. So all these profits ultimately, one way or another, will be paid as dividends to shareholders. And if the company has paid insufficient corporation tax, those shareholders will be taxed on those dividends. And one thing that Margaret Hodges' government did, of course, was to stop pension funds being able to claim back tax that companies had paid on their dividends, claim back corporation tax. And pension funds aren't supposed to pay tax, but when pension funds now invest in companies, they do pay tax because companies pay corporation tax and none of that can be reclaimed by the pension fund. So it's not surprising then that companies begin to use these slightly complex international mechanisms in order to reduce their tax bill.
Isn't the danger of your approach to tax, though, and the idea of tax havens, is that there's a race to the bottom? So there will finally be countries offering absolutely tiny tax rates, and companies will all go and base themselves there, and services here will have to be slashed to the bone because we don't have the money.
No, I don't think there's any danger at all of a race to the bottom. As I said earlier, companies do pay a huge amount of tax in other ways, and the corporation tax take has barely changed at all, actually, over the last few decades since these fears were raised initially about a race to the bottom. Governments are spending more and not less. They're raising more in tax from companies and not less. And if companies don't pay tax in terms of corporation tax when they actually make profits, as I mentioned, companies' owners, the shareholders, will end up paying income tax on the dividends that they receive, assuming that their tax position is such that they're supposed to pay tax on the dividends. So there really is no evidence of a race to the bottom. And in fact, I'd like to see the abolition of corporation tax entirely in a tax system which did actually focus on the owners of companies, the shares that they hold, and the returns that those shares generate.
I have to agree with Professor Booth, and the other point is that where the moral issue also lies is that corporations are, owe a fiduciary duty through their directors to their shareholders, and that duty must incorporate looking at legitimate ways of avoiding taxation and maximising returns. The feeling you get from Margaret Hodges' speech is someone is losing out here because tax isn't being paid. But actually the real loss is when the government overtaxes, not undertaxes. That's where we have real losses to society. It's not as if these people are hoarding money in some corner of the world. People who have money in their pockets will spend it, and that's how the economy benefits generally. So we have to look at this from a totally different angle. And in fact, it's often the people who most need the money that are going to lose out because of high corporate tax rates and complex corporate laws.
And I'm afraid we're going to have to leave it there. That's all we have time for. Well, that was Abhijit Pandya. He's a blogger for the Daily Mail and director of the Centre for Democratic Studies, a think tank. Miles Dean, who's founder of Milestone International Tax Consultants here in London. John O'Connell, research director at the TaxPayers Alliance. And down the line, we had Professor Philip Booth, who's from the Institute of Economic Affairs. Thank you all very much indeed.